Hi, this is Juliet Yang Orfiano. Welcome to my video. Kung first time ka, ito yung continuation ng part 5 tungkol sa organization and formation of a corporation. Kung saan i-discuss ko doon ang tungkol sa issuance of no par, no stated value share capital. I-click mo lang sa taas o sa link sa baba ng video ito para mapanood mo yung part 5. Ang pag-uusapan natin sa video ito ay ang sumusunod. First, subscription defaults. Second, incorporating a sole proprietorship or a partnership. Third, books of the old partnership are retained. 4. New books are open for the corporation. Subscription defaults. When a subscriber fails to pay his obligations after the corporation has sent several notices to him, his subscribed shares are declared delinquent shares. His subscription is declared delinquent subscription. Such delinquent subscription is then offered for sale in a public auction, and delinquent shares are issued to the higher bidder. The highest bidder is the one who is willing to pay the unpaid subscription plus any expense incurred in connection with delinquency sale and is willing to receive the least number of shares. The following entries are made in relation to subscription defaults and issuance of stock certificates. A. Upon default, debit receivable from highest bidder and credit share capital subscription receivable. Letter B. Cost incurred in connection with the delinquency sale, debit receivable from highest bidder and credit cash. Letter C. Upon receipt of payment from highest bidder, debit cash, credit receivable from highest bidder. Letter D. Upon issuance of certificate of stock, debit share capital subscribed and credit share capital or unissued share capital. All subscribed shares are issued. Shares are first given to the highest bidder. The excess of any are given to the defaulting subscriber. If there is no bidder, all of the delinquent shares will be issued in the name of the corporation. Such shares are considered treasury shares, and the following entries will be made after making the entries A and B. So letter C, debit treasury share capital and credit receivable from highest bidder. And letter D, debit share capital subscribed and credit share capital unissued share. Illustrative problem N. On June 15, 2008, the Happy Corporation received subscription for 2,000 shares of its 10 pesos par value ordinary share capital for 15 pesos. A down payment of 60% was received. The final payment was due on August 15, 2008. But in spite of the several notices sent to the subscriber, no payment has been received. On August 31st, the subscription was declared delinquent and was offered for sale in public auction. On September 6, expenses of 500 pesos were incurred in connection with the delinquency sale. On September 21st, payment was received from the highest bidder and shares were issued 1,500 to the highest bidder and 500 to the defaulting subscriber. The entries to record the foregoing transactions using the memorandum entry method is as follows. 2008, June 15, debit ordinary share capital subscription receivable for 30,000 pesos and credit ordinary share capital subscribed for 20,000 pesos and credit ordinary share premium for 10,000 pesos. 2,000 shares at 15 pesos is equals to 30,000 pesos. 2,000 shares at 10 pesos is equals to 20,000 pesos. 2,000 shares at 5 pesos is equals to 10,000 pesos. Another transaction on the same date. Debit cash for 18,000 pesos. Credit ordinary share capital subscription receivable for 18,000 pesos. August 31, debit receivable from highest bidder, 12,000 pesos. And credit ordinary share capital subscription receivable for 12,000 pesos. September 6, debit receivable from highest bidder, 500 pesos. And credit cash for 500 pesos. September 21, debit cash for 12,500 pesos, credit receivable from highest bidder, 12,500 pesos. September 21, debit ordinary share capital subscribe for 20,000 pesos and credit ordinary share capital for 20,000 pesos. Incorporating a sole proprietorship or a partnership. A sole proprietorship or partnership may decide to incorporate to enjoy advantages of being a corporation. The books of the old organization may be used by the new corporation after giving effect to changes that may have taken place, or a new set of records may be opened. It is a common practice, however, that a new set of books is used by the new organization. Books of the old partnership are retained. If the books of the partnership are retained, the following steps in recording the incorporation will be as follows. First, revalue the net assets of the partnership, like assets and liabilities. Adjustments in asset and liability balances may be reported through a revaluation account called capital adjustment account, or recorded directly to the capital account of the partners. Second, recognize goodwill. The total value of the share capital to be issued is compared with the adjusted fair value of the net asset received from the partnership. The excess of the total value of the share capital over the adjusted fair value of net asset is payment for goodwill. Number 3. In case a revaluation account is used, close the balance of capital adjustment account to the capital accounts of the partners in accordance with their profit and loss ratio. Number 4. Record the authorized share capital of the new corporation. Number 5. Record the issuance of share capital to the partners. Number 6. Record any necessary distribution of cash to the partners. Number 7. Record the issuance of share capital to other incorporators or stockholders. New books are opened for the corporation. If a new set of books is opened for the corporation, the following shall be recorded in the corporation books. First, authorized share capital. Second, issuance of share capital for the net asset transferred by the partnership. Third, issuance of share capital to other incorporators. Entries are also prepared on the partnership books to record the following. First, revaluation of net asset. Second, recognition of goodwill, if any. Third, closing the balance of capital adjustment account to partners' capital accounts. Fourth, receipt of share capital from the new corporation. Number 5, distribution of share capital to partners. Number 6, distribution of cash to partners if there is any. Illustrative problem O. Roberto and Remedios are partners, sharing profits and losses in the ratio of 3:2. They decide to retire from active participation in their business, so they form a corporation to take over the net assets of the partnership. The statement of financial position of the partnership just prior to the incorporation on January 1st, 2008 is as follows. Roberto and Remedios Partnership, Statement of Financial Position, January 1st, 2008. Under asset, cash is 45,000 pesos. Accounts receivable, 75,000 pesos, less allowance for uncollectible accounts for 3,000 pesos. So there's a net of 72,000 pesos. Merchandise inventory for 25,500 pesos. Equipment for 90,000 pesos, less accumulated depreciation of 30,000 pesos. So there's a net of 60,000 pesos. The total assets is 202,500 pesos. Under liabilities and equity, accounts payable 60,000 pesos, expenses payable 15,000 pesos, Roberto Capital 90,000 pesos, Remedyo Capital 37,500 pesos. The total liabilities and equity is 202,500 pesos. The corporation is organized as the Winner Corporation and authorized to issue 10,000 shares of ordinary capital par value of 10 pesos, 25,000 shares sold for 20 pesos. The corporation takes over the partnership assets other than cash and assumes partnership liabilities in exchange for 12,000 shares. The following adjustments are to be made before taking over the net assets. Letter A. The inventories are to be stated in their market value of 45,000 pesos. Letter B. The allowance for uncollectible accounts is to be increased by 5,400 pesos. Letter C. Equipment is to be recorded at its current value of 120,000 pesos. The ordinary shares will be distributed as follows. Roberto, 9,000 shares. Remedios, 3,000 shares. Cash will be distributed based on the capital balances of the partners after distribution of shares. The ordinary share capital are selling at 15 pesos per share on this date. Assumption number 1. The books of the partnership will be used by the new corporation. Step number 1. Revaluate the net assets of the partnership. A. Debit merchandise inventory for 19,500. Credit capital adjustment for 19,500. Letter B. Debit capital adjustment for 2,400 pesos. Credit allowance for uncollectible accounts for 2,400 pesos. Letter C. Debit accumulated depreciation for 30,000 pesos. Debit equipment for 30,000 pesos. And credit capital adjustment account for 60,000 pesos. Step number 2. Recognize goodwill. Debit goodwill for 20,400 pesos. Credit capital adjustment account for 20,400 pesos. Net asset before adjustment, 202,500 pesos less 60,000 pesos less 15,000 pesos is equals to 127,500 pesos. Add net adjustment, 19,500 pesos less 2,400 pesos plus 60,000 pesos is equals to 77,100 pesos. Net asset after adjustment, 204,600 pesos. Less cash, 45,000 pesos. Net asset excluding cash, 159,600 pesos. Market value of share capital issued, 12,000 shares at 15 pesos is equivalent to 180,000 pesos. Goodwill, 20,400 pesos. Step number 3. Close the balance of capital adjustment account to partners' capital accounts. Debit capital adjustment account for 97,500 pesos. Credit Roberto Capital for 58,500 pesos. Credit Remedios Capital for 39,000 pesos. 77,100 pesos plus 20,400 pesos is equals to 97,500 pesos. 97,500 pesos times 3/5 is equals to 58,500 pesos. 97,500 pesos times 2/5 is equals to 39,000 pesos. Step 4. Record authorized share capital of the corporation. Authorized to issue 100,000 shares of 10 pesos par value ordinary share capital. Step 5. Record of share capital to partners. Debit Roberto Capital 135,000 pesos. Debit Remedios Capital for 45,000 pesos. Credit ordinary share capital for 120,000 pesos. Credit ordinary share premium for 60,000 pesos. 9,000 shares times 15 pesos is equals to 135,000 pesos. 3,000 shares times 15 pesos is equals to 45,000 pesos. 12,000 shares times 10 pesos is equals to 120,000 pesos. 12,000 shares times 5 pesos is equals to 60,000 pesos. Step number 6. Record the distribution of cash to partners. Debit Roberto Capital for 13,500 pesos. Debit Remedios Capital for 31,500 pesos. Credit cash for 45,000 pesos. 90,000 pesos plus 58,000 pesos less 135,000 pesos is equals to 13,500 pesos. 37,500 pesos plus 39,900 pesos less 45,000 pesos is equals to 31,500 pesos. Step 7. Record the issuance of ordinary shares to other incorporators. Debit cash for 500,000 pesos. Credit ordinary share capital for 250,000 pesos. Credit ordinary share premium for 250,000 pesos. 25,000 shares times 20 pesos is equals to 500,000 pesos. 25,000 shares times 10 pesos is equals 250,000 pesos. 25,000 shares times 10 pesos is equals to 250,000 pesos. Assumption number 2. New books are opened for the corporation. Step 1. Revalue the net assets of the partnership. A. Debit merchandise inventory for 19,500 pesos and credit capital adjustment accounts for 19,500 pesos. Letter B. Debit capital adjustment account for 2,400 pesos. Credit allowance for doubtful accounts for 2,400 pesos. Letter C. Debit accumulated depreciation for 30,000 pesos. Debit equipment for 30,000 pesos and credit capital adjustment for 60,000 pesos. Step 2. Recognize goodwill. Debit goodwill for 20,400 pesos. Credit capital adjustment for 20,400 pesos. Step 3. Close the balance of capital adjustment account to partners' capital accounts. Debit capital adjustment account for 97,500 pesos. Credit Roberto Capital for 58,500 pesos. Credit Remedios Capital for 39,500 pesos. 77,100 plus 20,400 is equals to 97,500 pesos. 97,500 pesos times 3 over 5 is equals to 58,500 pesos. 97,500 pesos times 2 over 5 is equals to 39,000 pesos. Step 4. Record the receipt of shares capital from the new corporation. Debit Winner Corporation ordinary share capital for 180,000 pesos. Debit accounts payable for 60,000 pesos. Debit expense payable for 15,000 pesos. Debit allowance for uncollectible accounts for 5,400 pesos. Credit merchandise inventory for 45,000 pesos. Credit accounts receivable for 75,000 pesos. Credit equipment for 120,000 pesos. Credit goodwill for 20,400 pesos. Step number 5. Record the distribution of share capital to partners. Debit Roberto Capital for 135,000 pesos. Debit Remedios Capital for 45,000 pesos. Credit Winner Corporation Ordinary Share Capital for 180,000 pesos. 9,000 shares times 15 pesos is equals to 135,000 pesos. 3,000 shares times 15 pesos is equals to 45,000 pesos. Step 6. Record the distribution of cash to partners. Debit Roberto Capital for 13,500 pesos. Debit Remedios Capital for 31,500 pesos. Credit cash for 45,000 pesos. 90,000 pesos plus 58,500 pesos less 135,000 pesos is equals to 13,500 pesos. 37,500 pesos plus 39,000 pesos less 45,000 pesos is equals to 31,500 pesos. New corporation's books. Step 1. Record authorized share capital of the corporation. Authorized to issue 100,000 shares of 10 pesos par value ordinary share capital. Step 2. Recognize the issuance of share capital in exchange for the net asset of the partnership. Debit accounts receivable for 75,000 pesos. Debit merchandise inventory for 45,000 pesos. Debit equipment for 120,000 pesos. Debit goodwill for 20,400 pesos. Credit allowance for uncollectible accounts for 5,400 pesos. Credit accounts payable for 60,000 pesos. Credit expense payable for 15,000 pesos. Credit ordinary share capital for 120,000 pesos. Credit ordinary share premium for 60,000 pesos. Step 3. Record the issuance of share capital to other incorporators. Debit cash for 500,000 pesos. Credit ordinary share capital for 250,000 pesos. Credit ordinary share premium for 250,000 pesos. 25,000 shares times 20 pesos is equals to 500,000 pesos. 25,000 shares times 10 pesos is equals to 250,000 pesos. 25,000 shares times 10 pesos is equals to 250,000 pesos. Thank you for watching my video. I hope nagustuhan mo at may natutunan ka sa videong ito. Don't forget to like, share, at mag-subscribe ka sa channel ko para ma-notify kita kapag may bago akong video. Once again, this is Juliet Yang Orfiano. See you on my next video.